when you think about financial advisors, when once again, we know that it's kind of a catch-all term, and it encompasses so many different types of advisors, but most people don't understand that. But what's interesting is when you meet someone out and you say, oh yeah, I'm a lawyer, or I'm a doctor. And these were the first two professions that immediately came to mind when I started thinking about this analogy. But if you go to meet a criminal defense attorney and he's telling you, you go to tell a criminal defense attorney, hey, I need to go get my will done. Very immediately, that criminal defense attorney is going to refer you to an estate planning attorney. They are not going to try to help you. They are not going to go outside of their lane. Their lane is criminal defense law, and they're going to stay in their lane. Mm-hmm. If you go to a patent attorney and you say, hey, I just robbed a store and I need some help. I need a criminal defense lawyer. Right. The patent law attorney is going to say, I can't help you. So lawyers are very, very quick to stay in their own lane, even though we use this term lawyer as a catch-all, right? But we all know intrinsically there's so many different types of lawyers out there that specialize in different things.
First of all, when you are talking to somebody who identifies themselves as a financial advisor, you should immediately say what kind. And if they start talking about their company, right, that should be a red flag that you are dealing with an insurance agent or a broker, right? Probably both, to be real honest with you. If they say, I'm an investment advisor, okay, that's not a bad thing. You know what you're dealing with. If they say they're a financial planner, which is what we would say, be aware, there's a lot of insurance agents who will say, I'm a financial planner. That doesn't mean that they are in the definition that we are. So ask them, so how do you develop financial plans? Ask them questions.
Thanks for coming back to another edition of the Retirement Planning Happy Hour. Eric Douglas, Chris Vaughn with Family Wealth Planning Partners, where we talk all things finance and we enjoy a little bit of bourbon while we do it, right?
Yep.
So we are sitting here on a Friday afternoon. I think it's afternoon now, almost. Close enough.
It will be by the time you finish this sentence,
so
right?
We're sitting here on a Friday afternoon, and we are enjoying a wonderful, wonderful bottle, one of my favorites. I'm sure most people that are in the bourbon space would agree that this is a fantastic
pour. If you know anything
pour.
about bourbon, this is a good pour.
But today's topic, before we talk about the bourbon real quick, and we probably won't spend a ton of time on it because everyone knows we're drinking a bottle of Weller, and there's only so many good things you can say about it, right? Before you're just gonna...
I'm going to disagree. I can say good stuff all day.
You can say good stuff all day about it, but it's just everybody already knows how great Weller is. But with that being said, today's topic is why we hate financial advisors, or to be more specific. To be a little bit more specific than that, why do we hate the term financial advisor?
There you go.
Okay, because for some reason this has come up, I think, about 3 different times this week.
Yeah, this week.
For whatever reason, I've had this conversation, and I've started to use this term. I really hate the term financial advisor because it lumps all of us in together. Mm-hmm. And there's so many differences between the types of different financial advisors that are out there that are completely different, on completely different ends of the spectrum.
Yep.
Whatever the advisor spectrum is, right? There's so many different types of advisors that are on completely opposite ends of the spectrum that do completely different things. Yeah. And so many people, I don't know a better term, but the layman out there doesn't really understand the difference. And so we're going to spend a lot of time talking about the difference in financial advisors today. That's where we're going to be going. But first, feel free to introduce this
Let's talk about
wonderful,
bourbon.
Delicious bottle of Weller that we're going to be sampling.
Okay, so for those of you who don't know, which I would assume is going to be the minority of people who would be watching this, Weller is a Buffalo Trace product. At least it has been for quite some time now. There are several different variations. This is not the top end price-wise, not even approaching it, but it tends to be one of the better ones. This is what's called Antique 107, or some people just call it Red Label, or just Antique, or just 107. I mean, It's really
I know it is
synonymous.
I know it is a Red Label. Yeah.
And this one is special. So, all right, Weller is there's no bad Weller.
Yeah.
There's not a bad Weller out there. I think the Red Label is among the better ones until you get into the crazy prices and the unique stuff. But this one is different in that it is a barrel pick. So I want to talk about the barrel pick concept for a minute. For those of you who don't know, a barrel pick means an individual or usually a group of people go in. There are several barrels picked out by the distillery, and they go in and they do sampling, and they pick the one that they like, and they buy the whole barrel, right? And there is a belief that a barrel pick is always better than a non-barrel pick. I disagree with that. And here's the reason I say that. The people who are picking that barrel might not have a palate like yours. You have certain things you like and certain things you're not a fan of. So, you and I've talked before, you're not normally a big fan of ryes.
Yeah.
That doesn't mean that you dislike all ryes. Well, somebody who does have a palate that leans towards that is probably not going to be a good barrel picker for you. So just because it's a barrel pick doesn't mean it's better. But if you find a group of people that do barrel picks, for example, here in the Louisville area, Kroger Wine and Spirits has a group called Chris Picks. And I can't remember Chris's last name. I've met him
Blanford.
a few times.
Yeah.
Blanford, okay. His palate is really close to mine. So anything I see that's a Chris Pick at Kroger, pretty good chance I'm going to like that. So that's kind of what we're dealing with here.
It's so funny you talk about the Kroger Chris Picks because a client of ours, former employee of Kroger that I was just meeting with earlier this week, and he was talking about a barrel pick that he was on with Chris. And how basically he goes to these distilleries and gets the red carpet rolled out for him.
Oh, yeah. Yeah,
So-
I've done a couple of barrel picks, and it is a lot of fun.
Yeah.
If you're a bourbon nerd like I am, if you get a chance to go on one, you really need to. There is a distinct possibility. I'm working on it. I'll let everybody know when it happens. I might get to go on a Sazerac rye barrel pick in a couple of weeks. So I'll
cool.
get back to you on that one. That would be a lot of fun.
That'd be very cool.
So let's move on past the bourbon and let's talk about why we hate the phrase financial advisor.
Hate it.
And it makes my skin crawl, and I'm guilty of saying it all the time. So you had a great analogy. Let's start with that.
Well, so when you think about financial advisors, when once again we know that it's kind of a catch-all term,
Yeah.
and it encompasses so many different types of advisors, but most people don't understand that. But what's interesting is when you meet someone out and you say, "Oh yeah, I'm a lawyer," or "I'm a doctor," and these were the first two professions that immediately came to mind when I started thinking about this analogy. But if you go to meet a criminal defense attorney, and he's telling you, if you go to tell a criminal defense attorney, "Hey, I need to go get my will done," very immediately that criminal defense attorney is going to refer you to an estate planning attorney. They are not going to try to help you. They are not going to go outside of their lane. Their lane is criminal defense law, and they're going to stay in their lane. Mm-hmm. If you go to a patent attorney and you say, "Hey, I just robbed a store and I need some help. I need a criminal defense lawyer,"
Right.
the patent law attorney is going to say, I can't help you. So lawyers are very, very quick to stay in their own lane, even though we use this term lawyer as a catch-all, right? But we all know intrinsically there's so many different types of lawyers out there that specialize in different things. Doctors are the exact same way. So when you think about, and you used, you mentioned the story that you had used talking, and I think you'll probably get to it at some point. But if I go in and I'm having heart palpitations,
Right.
I don't need to go see a podiatrist.
Right.
A podiatrist cannot help me.
Yeah.
And I know that, and the podiatrist knows that. Right. So if I go into the podiatrist's office and say that I'm having chest pains, they're immediately going to whisk me off to the ER.
Right.
They're going to be very, very clear and say that I am not the best person, I am not the most qualified person to help you in your situation. Our industry is completely different.
Oh, gosh, yes.
Completely different. So when you think about all the different advisors on that advisor spectrum that we talked about, if you go into the office and say, "Yeah, I've got a little bit of money and I need some help with it," every single advisor that you meet on that spectrum is going to say, "Yep, I
can do that.
I
Yep.
can help you. I've got a solution for that."
Right.
And now those solutions are going to be very wildly different depending upon which advisor you go to see. But every single one of those advisors does a horrible job of saying,
I'm not the right
I'm
one
probably
for
not
you,
the right
right?
person for you. And it's interesting because really as we've grown over these last couple of years, and we've had some significant growth over the last 2-3 years.
Sure we have.
I'm as guilty as anyone. When I first started off, I was very guilty of, I'll help everybody, right?
Yep.
That's not the case anymore. And we're actually pretty good about screening our clients. We actually do a pretty fantastic job of it now. We're far more selective on the types of clients that we work with because we know our lane.
Right.
And we know our specialty, and we've gotten really, really good at our specialty. But that's not the case for the vast, vast majority of advisors. And I'm using air quotes right now, advisors
There's that
that are
financial
out
advisor
there, right?
phrase again, right?
Yeah. And so I wish that our industry did a better job of differentiating between the types of advisors that are out there, because we do a horrible job at it, and we always just use the catch-all term financial advisors, and we lump everybody in the same group.
Well, I want to go back to your analogy for a minute. The reason that everybody lumps financial advisors into the same group is because they're not aware that there's differences, right? You and I are aware of it because we're in the world. Most people are not aware of it. And I was thinking while you were telling that story, I know I do this. I think most everybody else does. So you're at an event or something like that, and you meet somebody and they say, "Oh, I'm an attorney." Really? What kind of law do you practice? Is the first thing that I'm thinking. I would do the same thing if somebody says, "Oh, I'm a physician." Really? What type of medicine do you practice? Because I understand there's a lot of different variations, as you were just explaining. I think most people do that. They don't know that there's that many differences here. So we haven't trained ourselves, when you hear financial advisor, to say, "Oh, what kind of financial advice do you practice?" Because there's a lot of different variations. So I think this, maybe we'll just start a little trend. We're going to always ask, what kind of financial advice do you do? What is your lane? You know, the way you were explaining that. So we'll just kind of start from there. I compiled a little list for a short presentation that I did a couple of years ago on this subject. And I came up with 6 basic types. Now, there's a lot more than this, but let's not go too far down the rabbit hole yet. Let's keep it high level. And there's another category that falls into one of these, and I'm going to address that one first, and that is insurance agents. Now, when we talk about insurance agents, we're not talking about people who do property and casualty insurance. So that's your homeowners and your umbrella policies and your auto policies. Some of them do this, most of them don't. But when I say life insurance agents, that's what I'm talking, when I say insurance agents, I'm talking about life insurance agents, because if you have a life insurance license here in Kentucky, and I think this is true in most states as well, you have the licensure to sell fixed and indexed annuities, which means you can call yourself a financial advisor. How long did it take you to get your life insurance license?
Oh, it was a joke. I slept through half of the class.
I think it was a week.
It was a week-long class that you didn't need to pay attention to.
And passed it on your first attempt, because it's not a difficult exam, right?
And this was before. I mean, this was 07.
Yeah,
I think. And I mean, I hadn't even been in the industry yet. The first thing they do is put you through life insurance class to get your, to enroll to get your licenses.
Right.
It's the easiest thing ever. Yeah.
And here's what makes that one sad. So it takes you a week, maybe 2, to get your life insurance license. All of a sudden, you're a financial advisor. You can sell these products, which we've talked about in the past, if used correctly, can be fantastic. On the other hand, if they're used incorrectly, you can really do some damage. And you and I both had to unwind some nasty annuities that should never have been used. Right?
Annuities,
it's not fun.
It's also, just in the last 2 weeks, I've had 3 different variable life insurance policies that I'm going to be, these are new clients we're going to be onboarding, and we're going to have to unwind some of this stuff. Right. And so those are even trickier than unwinding an annuity sometimes.
So therein lies the next part of it. So most insurance agents, and I've got no problem with naming names with the companies, okay? Northwestern Mutual, New York Life, those kinds of places. If you're dealing with somebody at one of those companies, they are almost certainly an insurance agent first and what's called a registered representative second. And that's because that's what the company wants them to sell. Most of these life insurance companies are doing securities at some level now, because the buzz phrase for the last, 15 years has been holistic financial planning. So in order to do, quote unquote, holistic financial planning, you have to do the securities and the insurance side. So unfortunately, they market themselves as financial advisors. Technically, that's true, but what they are is insurance agents and then a registered representative. So a registered representative, a little bit more difficult than a life insurance license, right? You have to have a Series 6 or a Series 7 license. Now, the 7 is a tough test. I took it once upon a time. I hated it.
Yep.
I also took the 6. That's a mutual fund exam. Not nearly as difficult, but you can get all of those licenses done in a month. how good are you at what you do?
It would not be
with
a fun. In fairness, it would not be a fun month.
It would not be a fun month.
Yes.
But I studied for the 7 for about 3 weeks.
Yeah, I've got.
It was horrible. It sucked.
I think I've got 6 different licenses, securities licenses that I've passed and taken exams on. I have not failed one. Not to say that they were all easy. A couple of them were very, very difficult, but they're not. I'm not going to sit here and prop myself up as the world's smartest guy either.
Right.
Like, I mean, it was. I studied, right?
Mm-hmm.
But we've got a guy in our office that's currently studying for one of these right now. And it's interesting going back and revisiting with him.
And he's banging his head against the wall
some of this
a little
material, and he's banging his head against the wall a little bit. But I'm reviewing some of this material, and it's interesting because, in real life, this isn't very applicable.
Right. Hey, okay, there you just made my point for me.
Yeah.
So you get these licenses depending upon how good of a test taker you are.
Yeah.
I'm in the same boat that you're in. I'm a good test taker. You can have a very, very minuscule amount of experience, and you can sell those variable insurance products. And by the way, the insurance companies love these things because the profit margins are outstanding. And we've talked about variable annuities. I can't stand these things. You're exactly the same way I am. Variable life insurance, same problems.
Well, I will say with very, very few, there are a few exceptions.
There is always an exception. True.
But for the most part, yes, variable annuities, variable life policies, universal life most of them are garbage.
And there's the problem is that you've got somebody that has a minimal amount of experience, a minimal amount of, because the way the licensing works, can do these things. Now, something I will point out about a registered representative. So that they've got the 6 or the 7, right? If you've got a 7, you don't need to go get a 6 because it covers all of it. And they typically will have what's called a Series 63, which is a state law exam. Mm-hmm. If they've got that and they're with a company, then they are called a registered representative. I promise you, you will never meet a quote-unquote financial advisor who identifies themselves as a registered representative. It's never going to happen.
I've never used that term once in my life.
Because the first thing that's going to come out of your mouth, if somebody said that, you're going to go, what's a registered representative? It means nothing. It's a throwaway phrase. Yeah. Whereas even though it is very specific, financial advisor is extremely generic, but most people think they know what it means. So that's kind of the first one.
And one thing I'll add about registered representatives.
Yeah.
So you're seeing a lot of insurance companies now that are doing, or they were having their insurance agents go get these licenses.
Yep.
And so they can put themselves out there as registered representatives, as financial advisors, because they are licensed. Okay. Mm-hmm. And okay, that's better than not having a license. I'll give them that. But at the end of the day, if you work for an insurance company and you put yourself out there as a financial advisor, most of the advising you're going to be doing is going to happen to correlate with some of the insurance products that company that you work for sells. Yeah. That's just the way that it is. I'm also seeing it now. It used to be just the licenses. I'm seeing more and more insurance companies out there now because they understand that the industry is moving more towards the financial planning side. Mm-hmm. So I am seeing a ton of insurance companies basically being proactive and paying for registered reps that have been with the company for a certain amount of time. They're going out there and paying for their registered reps to get the CFP,
right?
The Certified Financial Planners exam, to pass that exam, which is great. It's a great certification. Mm-hmm. I'm not going to dog on. It's a really, really hard certification to get. But at the end of the day, if you're a CFP and you work for an insurance company, that doesn't really change the fact. You might be adding a little bit more legitimacy behind your name, but we're still working for an insurance company and right. You're going to be selling or leading with insurance products. So that's very, very important to understand. Yes, you might work with someone who has all the certifications and all the qualifications. However, it's important to understand who they work for and how they get comped, basically.
Yes, agreed. So, and something else I will add to that, there's a phrase called a broker. So a broker is selling a product. That's their job. When you're dealing with somebody who is working for an insurance company, they are most likely acting as a broker. Now, there's not a requirement in that case. They could be acting as an investment advisor. So that's where you got to be a little bit careful. One thing that you can do is you can go to BrokerCheck. So just go to Google and search for BrokerCheck. I think it's brokercheck.finra.org. I may be saying that backwards. FINRA.brokercheck.org.
If you Google BrokerCheck, you'll find it.
Yeah. You can look up anybody, right? So you're listed on there. I'm listed on there. Our firm is listed on there. If you go and you find that person and they have a B next to their name, it will say that they're a broker, right? Now, that's not necessarily a bad thing. Where you want to watch is if they've got a B next to their name and they don't have an IA next to their name as well, which we're going to talk about next. So just remember that a broker is selling a product. That's their job. That's what they get paid to do. They represent the company, not the client. That's the legal way that it works. So just be aware, if they're not an investment advisor, then they are a broker, which means they are selling a product. And they're typically paid commission on that product, so they're motivated to sell this product over that product, regardless of whether it's in the client's best interest or not.
For sure. What's next on your little list that you have in front of you?
The investment advisor, right? So this is the next little category. So what I was just talking about, this requires a different license.
Yes.
You have to have either a Series 65, as opposed to the 63 we talked about a minute ago, or a 66. Either one of those works. They are somewhat interchangeable. I think you have a 66, correct?
Well, I have a 66 because I already had my 7.
Bingo.
So because I already had my 7, that basically precluded me from having to get the 65 because the 65 has a lot of the 7 stuff in there, and we're getting super wonky, and
we are.
Nobody cares
and
about this.
I have a 65, by the way, so it's a perfect example. We do the same thing.
But at the end of the day, the 65 and 66 are basically equivalent.
Right. So anyway, when you have those licenses, now you are an investment advisor, and now you are operating as a fiduciary. So there's that's the first key word there. So what a fiduciary does is they have to operate in the client's best interest with what they're talking about, right? So in this case, securities, investment, things of that nature, they have to do what's in the client's best interest. And you want that, right? They typically are paid for their advice, and they are paid a fee based upon the value of the investments that they are managing. Now, that's not a requirement that they do it that way, but it's the most common way. So when you hear the Dave Ramseys of the world saying you need to be working with a fee-based advisor, this is what they're talking about. You need to be working with somebody who benefits because you did well. They are motivated for you to do well because then they do better. Whereas an insurance agent who is selling an annuity, they've already been paid.
Yeah,
it's not going to get better.
And you need the 65 or 66 in order to be able to do fee-based business.
Correct.
To act as a fee-only advisor, essentially. So if they do not have that, then they are getting paid commissions from selling products.
Correct.
At the end of the day.
Now, I would also argue that everybody else that we're going to talk about is also an investment advisor.
Yes.
So we would not put ourselves out there as investment advisors. We haven't gotten to our lane yet, but we are investment advisors because we have that license.
We do investment advising as a part of what we do.
Correct. Exactly right.
Yes.
So,
but when you're an investment advisor, really you're just talking and managing investments.
Right. You're not doing any of the other parts that we're going to talk about.
That qualifies you to be able to manage investments, and that's really it. It doesn't really add anything else to that.
And I would also put this one out there. Most investment advisors are going to bill you based on what's called assets under management. Some of them will bill you based on assets under advice. So you need to understand the difference. If you're talking to one of these people and they say, I charge you based on assets under advice, okay, be aware. That means that they are charging you on everything that they're counseling you on, even though they may not be managing it. It's what we call held away assets. So your 401k, for example, that's a held away asset. But if they are giving you advice on it and they say they're going to charge you based on your assets under advice, they're charging on a larger pool. Most don't do that, but some do. So make sure you understand the difference when you're talking to an investment advisor about how they get paid.
For sure.
We want to beat that dead horse a little bit more, or you want to move on?
The horse is dead and gone. Let's move on.
Okay, so let's move on to the next one. This is one that I have personally seen people screw this one up, and that is a financial analyst. So a financial analyst, first of all, this is a brutal it's a brutal designation to get. It's called a CFA, or a certified financial analyst. It requires 2 years of study. It requires a bachelor's degree. It is You want to talk about people who nerd out on investments.
These are
oh my gosh.
These are the dorks of our industry.
Yeah.
And I say that lovingly because these dudes are
I
smart.
know several of them, and they're smarter than me.
These dudes are smart. This is not an insult, but those are the dorks of our industry. Yeah. And usually most financial analysts are not going to be client-facing. Correct. Is that fair to say?
That's the way it should be.
Yes.
Unfortunately, there are some. Now, we say they're the dorks of our industry, and I don't know about you. I get that vision of the guy sitting in a dark dungeon-type basement surrounded by computer screens researching, and they have zero social skills whatsoever. But I know some CFAs that actually are very personable, and they speak well with people. Just remember, what they do, they're really developing portfolios.
Yes.
Right? They're the ones who, if there's a mutual fund where they're determining what stocks and bonds to buy and sell out of that mutual fund, those are CFAs doing that kind of work.
And so if you're a financial analyst, like on Wall Street, you see this kind of glorified in the movies, like, oh, I'm a financial analyst for Goldman Sachs and Merrill Lynch or whoever. Basically what that means is you're doing research.
Yeah.
And you're researching stocks and you're taking that to, the fund managers or the people that are kind of making decisions, but you're doing the grunt work. And actually there's a lot of consternation right now on Wall Street, specifically to the financial analyst role, because everyone talks about, AI and what jobs are AI going to be taking. Actually, that's one of the big ones that a lot of people on Wall Street are worried about. As far as jobs to be lost as financial analysts.
Yeah, I agree. But here's the big issue. If you are talking to a financial analyst, and they are almost always going to have the designation CFA, right? If you are talking to a CFA, they are probably not a very good planner or manager. And here's why I say that. And this is my opinion. But
probably a pretty good stock picker.
They are really, really good at analyzing stocks and bonds, whatever. And keep in mind, they're going to have specialties in that world as well. They're really good at developing that stuff. You said it. They're researchers. These are the people who can dig into the research and totally geek out, and they're in a happy place. And I'm sitting here thinking, oh my gosh, that's the most pure form of torture, right? But what they're not good at, as a rule, because they are so good at that research side, they're not creative people. They're not people who can think outside of the box and come up with solutions to problems. Well, when you're talking about how you're going to invest your money and the way it's going to be used, in my opinion, that requires some creativity, some outside box thinking. So the CFA is probably not who you want managing your overall financial plan. It's the person you want designing the portfolio that is used.
That's fair.
Fair enough?
Yeah.
All right.
And I know we definitely are overgeneralizing.
Oh, yeah, we are. Oh, big time. Because I know I can think of one CFA.
And I know there are CFAs out there. I'm not a dork, but
I can think of one off the top of my head. He's actually a client, and he's extremely personable. By the way, he is an accountant. He's a CFA. He's a former CFO. I mean, this is the true geek out on this kind of stuff guy. Super personable, very outgoing. There's no way you wouldn't love him if you met him. So he's not the stereotype we're talking about. We are generalizing. So you know who you are when you're listening. Don't come after me.
What's the term if you throw a stone in a pack of dogs? The dog who yelped is the one you hit. Right?
Yeah, something like that. Okay, anyway. So we have been droning on for 20 minutes or so on the basics. Before we get to the really good stuff, let's stop. Let's talk about Weller for a minute.
It's damn good. I don't know what else you want me to say.
Describe it, right?
It's I don't know why you brought some water to cut it. I don't really think that's necessary.
I'm going to do it as a scientist, but not because I want to do it. So I will tell you, when it comes to Weller in general, the reason everybody loves Weller, it doesn't have a whole lot of crazy flavors. This is not one of those bourbons that you're going to go, oh, I taste chocolate and cherries. You're not going to do that with Weller. You're going to hit all of the stuff that bourbon is supposed to taste like, and it's done at just like the perfect mixture. It is a wheater. All Weller is wheated bourbon.
And I typically tend to prefer wheated.
Yeah. I think most of us honestly do. If you didn't know this, Buffalo Trace has 4 mash bills. One of them is their wheated mash bill. And they even put on the barrels, they put Weller on the barrels, even though they might be using it for something else. I don't know, say Pappy Van Winkle. That's the same exact juice. It's just held longer. It's put in different parts of the warehouse, things like that. But this is the exact same thing.
Eagle Rare, same.
No, Eagle Rare is not a wheater. That's a mash bill 1. So that's a low rye. But there's a lot of them out there that you know of. The Wellers are the most famous. They started out with Stitzel Weller, but that was sold, I think, a couple of times. It's now owned by Sazerac, which is Buffalo Trace. What I love about the red label is 107 proof to me is almost the perfect sweet spot, right? It's proofed enough that the flavors are really starting to come out. They're nice and strong, but it's not so high proof that I've got tears running down my face because it's trying to kill me with the high proof. And we've had stuff like that.
Well, and this one's dangerous too, because this is at 107. This is dangerously smooth.
Mm-hmm.
I mean, you're going to get a tiny bit of a bite, in your palate, but it goes down smooth. There's nothing it's not coating your throat. It goes down really, really smooth.
I'm going to go 2 drops here. No more, just to try. And I've got, I don't know, maybe an ounce left in that glass just to get an idea and just see what that does.
If we're doing science experiments, right? I'll bite.
I'm not going to tell you what I just tasted. I'll let you do it first.
I'm not good at picking up those.
I know, but we're going to learn here today, right?
What do you taste, Chris?
I taste the same stuff I tasted before, but it's stronger.
A little bit.
And when I say
feel like
stronger,
cinnamon. I feel like there's
maybe a little bit.
Hint of
Yeah.
cinnamon. Yeah.
When I say stronger, I don't mean like, it's higher proof. That's not what I mean. I mean the flavors are stronger.
Yeah.
So I was watching a video, and I may have mentioned this last time we recorded. I was watching a video a couple of weeks ago. Now, the guy was talking about Irish whiskey, but the principles applied. And he was talking about putting water in your whiskey. And most people think, well, that's just going to water it down. Well, if you put enough water in there, it will.
Yeah.
Put an ice cube in that and wait till it melts. It's going to water it down big time. But what he was talking about, and he really went down the science rabbit hole, and so I'm geeking out. And he said, when you put water in there, you need to understand some of the chemical components of the whiskey are actually repelled by the water, any amount of water. And it causes them to flare out, and it actually brings out flavors that you wouldn't have gotten with no water, which is... Okay, I'm really geeking out, but that's one of those things that makes me go, I got to try that on everything, right?
I was going to say, now who's the dork?
Yeah,
right?
I'm the dork on this one. I agree. But I think that's what's happening here. It didn't change the taste. It just made all of the taste that I was already getting a little bit more forward in the flavor. Now, I can tell you were talking about it smooth. There's no burn going down the chest. There's no Kentucky hug on this, even at 107 proof. All the flavor and all the scents are going up into the olfactory.
Actually, there is a little more. There actually is a little more of an aftertaste on this when you added a couple
after the water.
Yeah.
See, to me, this is all up in the sinuses, which is awesome. I like that. This is one of the better bourbons if you can get it at retail, which is really difficult to do.
Good luck with that.
I did not buy this at retail, but it's a barrel pick. Barrel picks are all over the place, right? I didn't pay an exorbitant amount for it. I do have a little neat place. This is from Friendly Liquors, which if you live in this area, you're going, who in the world's that? But if you're from Paducah, Murray, Mayfield, that area, you know where it is. It's a local chain that's down in that area. I was down in Murray picking my son up at school, and I just stopped in a place and found this, and they still have it. Last I looked, and I would probably buy another bottle when this one gets low. But anyway, that's the Weller, so you don't need to judge this or score it. It's always fantastic.
Hey,
right?
guys, guess what? Weller is good. Okay. I don't know how much more insight we need to add to that.
Just get you some and enjoy it. And there are people who they kind of snob out a little bit, and they'll say, well, Weller's good, but I don't want the green label. That's the entry-level one. That's called Special Reserve. I've never had a bad bottle of green label Weller.
No.
Yeah, is it as good as this? No.
Well, Weller was the Eagle Rare before Eagle Rare was. So because I've talked when we did Eagle Rare before, I've talked about how I used to love Eagle Rare because when I was a broke kid right out of college and I couldn't afford much, I discovered Eagle Rare and I could get a bottle of it for $24, $25. and it was delicious. And then everybody else figured out, oh wait, there's this really good bourbon at
price
under
spiked,
$30. Yeah, and so now you can't find Eagle Rare anywhere. Well, Weller, that was Eagle Rare before Eagle Rare. Like that happened to Weller, before Eagle Rare, right? And so Weller used to be a really good price point, and then everyone else discovered how good it was, and then now you can't find it on the shelves anymore.
I'll tell you why.
At least not in Louisville.
When I first had Eagle Rare, it was introduced to me by a boss, and he said, "Now this is poor man's Pappy." Well, I was a novice at bourbon at the time. I liked it, but I didn't really know it. I didn't nerd out on it. Eagle Rare is not poor man's Pappy. It's not poor man's Blanton's. I've heard that one too. They're different mash bills, right?
Yeah.
Weller, on the other hand, is poor man's Pappy because this is exactly the same mash bill. It's the same juice. It's just aged differently in different parts of the warehouse or in different warehouses. But that's one reason why it's so good.
Which does have a really big effect.
It has a huge
on
effect
final
on
taste, but it's anyway. It's
all
very
right,
good.
So let's get back to the subject at hand. There's two left that I wanted to go into, and I do want to say there are uniquely different definitions of these, but the phrases are used somewhat interchangeably. So what we're talking about here is financial planners and wealth managers. Okay, so why don't you start with financial planners, because that's what we consider ourselves to be, right? Even though, like I said, the terms are technically, they're different, but they are used interchangeable. Why don't you define what a financial planner is?
Well, and feel free to back me up on any of this too, but when it comes to financial planning, when you're looking at all of the things that make up your different portfolio, so we've talked about kind of insurance and investment advisors. Well, insurance agents are going to talk about insurance, right?
Right.
Investment advisors are going to talk about your investments, clearly. Financial planners are taking into account all the other stuff.
Yeah.
And they're basically trying to coordinate the insurance and the investments along with the taxes that you have to pay,
the estate planning,
and I've done 3 of those in the last 2 weeks with clients, right? And so you're talking about the estate planning, you're talking about the taxes, you're talking about long-term care, you're talking about Medicare, you're talking about Social Security. Income is a huge piece of this. We talk about figuring out a retirement income plan. Most investment advisors are not really going to be specialized in that, and they're not going to be very well versed in trying to figure out the best ways to incorporate an income or a spending plan into your investment plan, because they manage investments. Okay, they don't coordinate or distribute income as effectively as someone who kind of specializes in the planning side of things. So really, when you're looking at a planner, you're looking at someone who's incorporating all of these other things, and most people don't really truly understand all of the other things that are involved in a plan, because so much of our business is focused on the investments.
Yeah.
If you turn on CNBC, it's not sexy to talk about tax regulations. It's not sexy to talk about estate planning. Okay, you're not going to turn on Fox Business and they're not going to talk to you about all the merits of, incorporating some type of a plan for long-term care, right? That doesn't get press. It's not sexy. Stocks are sexy, right? Investments, that's the sexy part of what we do. I don't know a better word than sexy, right?
No, but it's a good word to describe it.
But that's what gets all the press, and so many people, they focus on, my financial plan is, what my stocks are and what my stocks are doing, and I get X amount of return. Yes, that's an important part of it. Do not misunderstand. But all of that, the investments, the investment management that we do is secondary to the planning, right? And the planning takes precedent. You have to do the planning to figure out, okay, how should we allocate your investments? Right. What is the proper risk profile for your specific situation? Right. How much risk should you be taking? If we're allocating risk to every dollar in your portfolio, how exactly do we go about doing that in the most tax-efficient way possible, and in a way that's going to provide income for you, that's going to provide an income stream that you're not going to outlive?
Right.
That's what people care about. And really, as I spend more and more time in our business, it really is interesting. Not to say that, once again, returns aren't important. They are. They're very important. I'm not saying they're not important. But most people just want to know, can I live my life?
Right.
Can I continue my lifestyle in perpetuity? Am I going to run out of money? If I'm not going to run out of money and the math is good and everything kind of evens out, and I can feel comfortable going along and spending my money, okay, and incorporating a spending plan, not just an income plan in retirement, but can I go incorporate a spending plan? Can I go buy the car? Can I go redo the kitchen and the deck and take the vacation? That's what people care about. That's what planning solves. Investment advisors don't solve for that. It's a different skill set. It's a different strategy.
Well, I want to throw the wealth management phrase in here, and then I want to address something that you were just talking about. So traditionally, if you look it up, and I pulled out a Barron's Investment Dictionary that I got when I was in college, and I looked up financial planner, and I looked up wealth manager. Really, the only difference is the traditional word or phrase wealth manager means that you are working with high net worth people.
Yeah.
Otherwise, they're the same thing, and that's why they're used interchangeably. I would argue that wealth managers don't necessarily work with high net worth, and financial planners don't necessarily avoid high net worth. They do both, right?
And I hate that term with a passion, by the way.
Which one? The high net worth?
High net worth.
Yeah.
I hate that term with a passion because so many people think $1 million.
Yeah, define high net worth.
Exactly. How do you define high net worth? Am I defining high net worth in Louisville, Kentucky, or am I defining it in L.A.?
Totally different.
Totally different.
Yeah.
If you're a millionaire in L.A., who cares?
You live in East L.A.
That
and
means
there's
nothing.
riots in your neighborhood, right?
Well, that's a different story. But just the cost of living in L.A., San Diego, you know, any
much,
of these
much
other,
more expensive.
It's a different animal. So being a millionaire in L.A. is totally different than being a millionaire in Louisville, Kentucky.
Yeah, agreed.
And being a millionaire in Louisville, Kentucky is totally different than being a millionaire in Paducah, Kentucky.
Yes.
Love Paducah, by the way.
To
love
your
Western
point,
Kentucky.
high net worth is a relative phrase. It's kind of like we did a podcast about insurance, and we were talking about full coverage. It's not a real thing, right?
Yeah.
This is kind of the same thing. High net worth is a subjective phrase, but that is the definition textbook of wealth manager. They are interchangeable. I hold a designation that says that I am a wealth manager, but I would tell you what I do is I'm a financial planner, right? You're no different. We are financial planners. That's what we do. So let me point out some differences between the planning side versus the investment advisor side that a lot of people don't get. I've had this happen to me 3 or 4 times this year, where I was sitting around talking to somebody that I had at least somewhat of a relationship with, but they are not clients. I had a family member that I talked to, I had a neighbor that I talked to, a couple of friends. And they're getting to that age where they're starting to say, okay, I need a plan for my retirement. I'm getting close enough. And they started telling me what their plan was. I'm going to do this. 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 And what I think they were looking for was validation. Yeah. That's actually going to work. And I'm sitting here going, okay, that may work. I'm not going to tell you it won't work. I'm not going to tell you it will work. It's definitely not foolproof. But what they're looking for, if you have got your plan all laid out and you don't want somebody to do anything other than validate it, okay? And you are talking to an investment advisor, they're going to go, yep, I can invest that money exactly the way that you need it. If you're talking to a financial planner or a wealth manager, they're going to go, slow your roll there, Kemosabe, because you're not identifying where the potential problems are. Mm-hmm. Let me show you where the pitfalls are that you're not necessarily seeing. Let me show you the parts that, hey, I like this. This is good. Let me show you the parts that this part's not going to work, because they're thinking about the plan first. You were talking about how all the different parts that we look at, and we tend to use the phrases or the words comprehensive and holistic, and we hate those because they're so overused.
I hate them.
But I don't know a better way to describe
comprehensive financial planning. I wish we could wipe that term.
Yeah, just
from the,
gag
just
me
from
with
the
a
face
spoon,
of the earth.
right?
Yeah, holistic is another one. Nobody
knows what it means, but
I hate it. Yes.
I don't know a better way to describe it, but I would look at it this way. When you start saying, I'm going to take Social Security at X age, and the reason I'm going to take it then is because the amount of money that I will receive will pay this bill. And I'm going to invest my money in this type of portfolio, and then I'm going to pull 5% from it, and that'll do this. And then my pension will do that. All of these things are being thought about individually, right? They're not thinking about how each one of those things has an impact on everything else. Mm-hmm. Unfortunately, that's where the word comprehensive comes in. A good planner is going to be looking at the impact of every single decision on every other part of the plan. And to me, that's where I see the biggest difference is all of this goes together. And by the way, a good plan has a team of professionals. I am not a CPA. I do not want to be a CPA, right? But I've got to have a CPA involved to maximize the potential of a plan.
I'm still
right.
I am still amazed, and what wonderful people, smart people, the people coming in making $200,000-$300,000 a year, $1 million net worth, and they're doing their own taxes still.
Okay, I'm sorry, TurboTax people. That ad they run around Super Bowl every year that says anybody can do their taxes.
Yeah,
anybody can doesn't mean anybody should.
Yeah.
There's a big difference there, right?
And that's just a pet peeve. It boggles my mind that people still do that. And we always, whenever we get an opportunity, recommend using a CPA.
Yes.
Even if you're not at the level that I just said. But I just find it interesting, how successful people, the stuff that they were doing before they could afford to use some of these services, they still continue to do these things. It's interesting the mindset that people have, and we talked about this before. The psychology of money, right? How the habits that you develop when you're young, you carry into your old age. That's why it's always interesting when we put down and start planning with clients, even clients that might be worth a few $1 million. Well, they didn't come from money. They didn't grow up with money. They might have done the things that they were supposed to do, and they saved well. And they've benefited from a really good market. They don't change their habits.
Yep.
They never, because the habits are their habits. People don't change their lifestyles in retirement. I kind of wish some people would, honestly. Go have maybe a little bit more fun than you're doing, but people fall into their routines, and it's always interesting. That's an example of one where you see these clients that are ultra successful that are still doing their own taxes. And I just find that interesting.
And I'm going to pick on a profession. I'm going to pick on several people right now just for fun. And we've had these discussions. The two worst professions for do-it-yourself mentality, physicians and engineers. And here's why I pick on that. And by the way, I have several physicians that are clients, and I've got a bunch of engineers. I actually work well with them.
I met with one this morning.
And I think it's because my brain kind of functions a little bit like an engineer. Yeah. So I get along well with them. But these people, especially the physicians, they were the smartest kid in class, right? They were always the smartest kid through middle school and high school. They were in the top 5 in college, certainly in grad school, right? And you get in that habit. I've always been the smartest one. I don't need somebody dumber than me to do this work. Well, okay, it doesn't matter whether that person's dumber than you or not dumber than you. They are an expert in their field. You're not an expert in your field. And I'll toot my own horn for a minute. I probably have forgotten more about estate planning than most people know. And I do not just automatically say, here's what has to be done. I consult estate attorneys because they're experts. Even though I'm knowledgeable, they do this all day, every day, right? And I want to dig into their brain and get their counsel on how to solve the problem that my client is facing.
It's interesting. It's interesting that when you talk about estate planning, I'm going to use that as an example to further your point, right? You said you've forgotten more about estate planning, yet you're not an expert.
Right.
I kind of had a meeting recently where I realized I know what I'm talking about when it comes to estate planning. And I've always I've always talked about it, but I've always deferred to you and Brian. And
right.
Like you two are kind of the estate planning experts in our firm, right? Not to say that I don't know what I'm talking about. I've always kind of known what I'm talking about, but I've had a couple meetings recently where it's like I'm kind of getting to that point where I know more than I think, and I definitely know more than the average person. And I am not an attorney.
Right.
I have no business, and I never do, put myself out as an attorney or act like I'm some type of an expert. I'm still very much in the mindset of I don't really know that much. Right. I know enough to have a conversation, and I'm starting to realize I probably know more than I give myself credit for. Just because based on a couple and actually really what it was is I had a client come in and they brought all their documents from a previous estate plan that they had put together, and I was reviewing it and I'm kind of walking through everything, and I kind of realized, oh wait, I actually know exactly what I'm looking for, and I know where to find it, and I know what it means, and I was like, oh wait, I kind of know what I'm talking about here. Oops. I didn't go to law school.
Right.
But you talk about this stuff enough, and we do enough planning. And we've always referred out the big stuff, right?
Sure.
We have the conversations, but it's just interesting to further your point. We know probably more than most when it comes to estate planning. I would never do my own estate plan.
No. Actually, you kind of just proved the point that I was going to make. I'm really good with estate. I know more than most,
and you are. I'm going to back you. You really do know what you're talking about. Yeah.
And I have an accounting degree. I don't do my own taxes. I have a CPA that I use for that. And by the way, I lean on him for accounting questions. Even though I'm pretty sure I know the answer, I still make a phone call and I go, "Hey, Dan, talk to me. I need some advice on this one." He does the same thing with both of us, right?
We had different college experiences, by the way. I was a communications major because I didn't know what I wanted to do when I grew up.
Right.
All that to say, I don't do my own marketing. I hand that off too. So, yeah.
But the point here is a good financial planner, wealth manager, whatever you want to call them, knows more than most people about most of these subjects. But they will still bring in experts to deal with the different things.
Yeah.
And I'll give you an example. So there are a lot of people that should be in your team that are supporting your financial dreams, right? The three to me that are absolutely key is the financial planner, the CPA, and the estate attorney. And I have a client of mine that I sent out to have their estate updated. It was out of date. I said, okay, here's what I think needs to happen. Let's get you set up with an attorney who can go through this. So they did. They met with the attorney. The attorney went through a lot of work with them and really picked their brains about what they want to accomplish. And this took weeks, right? Because this is a not to use the phrase that we just said, a relatively high net worth family. So the attorney then called me and called the CPA and said, okay, we've pretty much laid it out. I want to run this by you all and see what you think. See, this particular attorney recognizes that she's not smarter than everybody else. She needs part of that team. So the three of us had a meeting, and everything that she was coming across, the CPA and I are going, that's awesome. I love it. That's great. Fantastic. And then she got to one. And she said, okay, they have decided that upon their deaths, they want to leave $200,000, a very specific number. They want to leave $200,000 to a couple of different charities that they are passionate about, right? So I need you, and she was looking at me, I need you to kind of partition that $200,000 somewhere, right? Well, there's a lot of ways that you can do that. And I know what she was probably thinking. She was probably thinking, let's take out a whole life insurance policy for $200,000. We're dealing with people in their 60s. That's not going to be cheap, and it's not efficient in this case. The CPA and I looked at each other immediately and went, donor advised fund.
Yeah.
Now, this particular attorney's been practicing.
I was already thinking that.
Right, exactly. Yeah. This particular attorney's been practicing for 35 years. Okay, she's been around this block a few times. She didn't know what it was. She probably had heard it at one point in time and maybe forgotten about it, right? But the CPA and I were immediately like, no. There's a better solution for what they want to do. And if you don't know what it is, a donor advised fund is, it's an investment account that the money that you put into it is a donation. Because the donor advised fund is held by a 501c3. You put the money into it, you can invest it any way you want to. And then you can either give it away while you're alive, or upon your death, it's given away to the charities that you have listed. So we said, you know what? They're in their 60s. They're both really healthy. They're likely to live into their 80s or 90s. How long does it take for the value of money to double? Blah, blah, blah. Let's do a DAF, and let's put $100,000 into it. And upon their death, it'll probably be worth more than $200,000. So we're making their charity more efficient. Well, we created an extra $100,000 for them to go spend. You know what they did, by the way? They took a river cruise in Europe. That's a horrible situation.
I want to do that. That's
exactly.
That's one of the things I definitely want to do.
But that's my point. When you're working with a good planner, that planner is going to get a team of people around them.
It's so funny because I have an exact same experience, except I was in a room meeting with an estate planning attorney and an accountant. And we were a team, right? We were all consulting with the POA and a client. And I was mentioning that we had some very highly appreciated stock in a brokerage account, and we needed to do something with it. and I was talking about doing a donor advised fund, and I'm having to explain the concept to an estate planning attorney and an accountant that had quite a bit more of experience than I did at the time. So it's interesting that you say that, because to your point, one of them has said, yeah, I think I'd heard about one of these before. How exactly does it work? And this was when I'd first kind of gotten into the business, when we first started our business however many years ago. And so it was an interesting experience for me to be on that side of the table. And that's where I really, truly realized, not to say that, these were very, very, very smart guys, and they do a fantastic job, and I would refer anybody to either one of these guys, but they're in their lane. And it was very instructive for me to understand that, we have our own lane, and we have our own purpose. And what we do is valuable.
Yeah. And once again, I'll keep banging on this drum because people need to understand it. Good financial planners work as part of a team. Now, I would argue my CPA and my estate attorney that were in that particular situation would fight back, but only because there's some egos here, but they would agree with me. The planner really is the quarterback, right? They're the ones who's kind of directing traffic for all of this. But your planner needs to be working with a team of people, all of whom are working in cohesion for your situation, right? So if you're presenting an idea, here's what I want to do, and you lay it all out, you've developed your own plan, okay? And the financial advisor, quote unquote, says, not a problem, I can do that. Boom, end of discussion. They're either a broker or they're an investment advisor, but they are not a financial planner or a wealth manager, because that person is going to say, okay, let's start working through that, right? Mm-hmm. So just that's my own little take on those.
Is there anything else on your little list that you have there?
No, I mean, there are other things that we can get into, but I think we're definitely getting down on the micro level, and that's not necessary.
Yeah, I'll add two very, very quick, because we're kind of running up on time here. Your accountant is not an advisor.
Correct.
We see that a lot. My accountant consults, and he gives me some ideas, and he helps me. Your accountant is not your advisor. Family office, that's another one we haven't really talked about, but that's a very, very, very specialized. No, I don't want to say specialized, but that's a very specific advisor. It's basically a wealth manager, financial planner that works with one or a very small.
I was going to say there's single and there's multifamily variations on it.
But basically, if you're working with a $200 million family, right, that's an advisor that works and caters really only to that family. So when you hear the term family office, that's essentially what they're referring to. They work with. Okay, if I say
that's the true high net worth.
If I say I hate the term high net worth, but we're talking about the ultra high net worth clients, and there's no doubt that these clients are ultra high net worth.
Yeah,
that's a different type of specialty, because they're usually there's private equity issues and alternatives and different types of investments.
Things that we can't stand, but they are appropriate in that scenario.
And they're doing stuff that's not applicable to 99% of the investment public.
They have what we affectionately call, I'm going to clean this up to make this a family-friendly show, they have screw you money, right? They have, and everybody that's listening knows what that phrase is, they have more money than they are likely to be able to spend in a couple of generations. That's where the family office comes in.
So that's
and they vary pretty wildly on what they do as well.
Yeah, and that's a different, and in some cases they're even like going to the point of like paying bills and doing things like that. The things that are so elementary for most folks. But that's a different type of an advisor, and once again, probably anybody listening to this is not going to fit into that category. So, with that being said, we're an hour in. We're right at an hour in. Any final thoughts on the bourbon, on the conversation today?
Okay, so a couple of things. On the bourbon, I poured myself another little splash. If you're listening, you didn't see that. And I did not put the water in it, just to kind of do that back-to-back comparison. I like it better without. But this stuff is so good as long as you don't like pour a pitcher of water in it and screw it up. The only thing I would say about this is do not put anything in this other than a couple of drops of water. Don't try to make a cocktail out of this.
No.
If you put Diet Coke or something like that in it, please do not ever tell anybody like that, because we're going to break into your house and take your bourbon away from you. This is truly one of the great bourbons that you're not realistically going to spend crazy money on.
Yeah.
Weller Red Label is just one of the outstanding pours out there. So that's my opinion on the bourbon. And then the other thing that I would put is, go back to the beginning of what we were talking about. Financial advisor is an extremely generic phrase. When somebody says they're a financial advisor, you're at a cocktail party or at a family event or whatever the case might be, and you're just talking to somebody and they say they're a financial advisor, the next words out of your mouth should say, what kind?
Yeah.
Just like you would with an attorney or a physician, there are specialties, and you need to know what kind of person you're dealing with, right? If they are extremely proud of the name that they work under, run.
Red flag. Yeah.
Run as fast as you can.
Well, I work for so-and-so, then you see them on Super Bowl commercials and they do national advertisements. Yeah,
I had a guy, I do not remember his name, and I would not say it on here. It was right on the other side of the wall right there. We had a networking event here several years ago, and everybody was introducing themselves and what they do. And this guy said, I work for this little company. You might have heard of it. New York Life. And I almost threw up on the floor. And it's like, do you realize how stupid you sound when you talk like that?
Okay. Since you said that story, I have to say this.
Okay, go for it.
So a networking group that my wife was in, she was, because she had opened her own business. We opened a business, last year. I say she does everything, right?
Can we say the name? Hotworks.
Hotworks, Infrared Studio. It's fantastic. I highly recommend. It's a great studio. But all that to be said, she was doing a networking event, and she met someone from New York Life, almost exactly to a T.
Yeah.
Was talking about, I work for New York Life, and we need to get together and we need to talk about this. And she calls me afterwards. And she's like, in case obviously it was cool, she's married to me, obviously,
right,
and a planner, and I'm in the business. And she's like, do we need to meet with this guy?
Oh, they're really good.
Because she was like, this guy sounded like he was important, and he sounded like we needed to meet with him. And I was like, I'm married to an advisor, and I don't think we need to meet with you, but let me talk to my husband.
Right.
So she calls me, and she's like, are we supposed to meet with this guy or something? Because he sounded like he was really important. And I said, nope.
And I'm picking on them a little bit because I've met so many other people. It's a big company. They're very successful. Why are they successful?
Well, they encourage their people to do the networking stuff, and they're out and about.
Right. And I was just looking through. So we are recording this on the Friday going into Labor Day weekend. My wife and I are going to the home show tomorrow, right, down at the convention center. And I was looking through the list because there's some specific things on our house that we're thinking about doing, and we really need ideas. And I'm looking through the list, and it's like, oh, okay, there's a place that does pergola, and there's a place that does concrete, resurfacing. And I'm going, yeah, I'm digging this. And New York Life is in there. And I'm sitting there going, okay, I know what's going to happen. I'm going to walk past their booth, right? And they're going to reach out and grab me.
Yeah.
And it depends on my mood. I might play along for a little while just because I've got a little troll in me.
Yeah.
I might just say, thanks, I'm good. It depends on my mood and whether my wife goes, oh, Lord, here he goes. Right. So we'll see. So I apologies to them. They just kind of fell under my ire today because I saw that name earlier today when I was looking at the list for tomorrow.
You just have some employees in the Louisville, Kentucky area that are very aggressive. So maybe that's probably the way they train you. Good for them, I guess, for following instructions. But
I think that's a good way to wrap up. If you, first of all, when you are talking to somebody who identifies themselves as a financial advisor, you should immediately say what kind. And if they start talking about their company, right, that should be a red flag that you are dealing with an insurance agent or a broker, right? Probably both, to be real honest with you. If they say, I'm an investment advisor, okay, that's not a bad thing. You know what you're dealing with. If they say they're a financial planner, which is what we would say, be aware there's a lot of insurance agents who will say, I'm a financial planner. That doesn't mean that they are in the definition that we are. So ask them, so how do you develop financial plans? Ask them questions. If they struggle to answer them, they're probably one of those ones that we talked about earlier in the show.
It's interesting because, once again, this goes back to kind of aggressive sales tactics, and maybe now we're going down another rabbit hole. But so when I go to like church or I go to see acquaintances, it's interesting to find out that most of them don't really. I don't really talk about myself much when I'm out and about, and some people kind of know that I'm in the business, but they don't really know to the extent that this is our company, and this is what we do, and this is how we do it, and we're relatively good at what we do. And not to toot our own horn, but it's interesting because they I don't go around like soliciting clients from my acquaintances and from my friends. So because I don't do that, I think a lot of them think that I maybe am not. But that's not my target audience.
How aggressive are the people that we're talking about, right?
and I think so many people are used to people that are in this industry that are very, very aggressive, and get the list. They're focusing on their friends and their families, and they're trying to build up a list and a call list, basically. And we don't do any of that stuff, right? And so it's always interesting when I hear, talk to acquaintances like, oh, wait, you do this? To what level? Oh, we need it.
It happened to me last night. If you remember, you and I did a estate planning workshop out in Shelby County where I live. And it was a packed house. It really was. And there's a lady sitting there, and I do not know her by name. I apologize. But she was sitting there. I see her at church all the time. Because I'm on the security team at church, I'm frequently standing in a very stagnant position, just watching to make sure everything's okay. So everybody sees me. And she went, I didn't know you did this. Been doing this for quite some time now, but I don't go to church and tell everybody, hey, I'm a financial planner. Come see me. That's just, that's not the way we live our lives.
Yeah. So anyway, that's probably a good place to wrap.
Let's wrap this up.
Thanks for watching. Thanks for joining us. We'll see you next time.
Go get some Weller 107.
Make sure you get some Weller Red Label. It is delicious. So thank you, Chris, for bringing that in. We'll see you next time.